Gold is down almost 30% in 2026, and while bears are calling for more pain, we're going to show you something no one is talking about that could flip the script on where gold goes next. Sit tight as we give you key insights and 3 ASX gold stocks set for massive moves next. Backed by Australia's leading government-accredited share trading education and insights that are sought after by major media outlets Australia-wide. I am Philip Tortevsky, joined by senior analyst Pedro Banales, and we are Wealth Within. Good evening.
Good evening, Phil. Let's see if we can get some golden opportunities here.
Yeah, I like your style, mate. All right, let's get straight into it now. Before we get into our first stock, I want to bring up a few charts on the screen to show you what we are talking about, because Pedro, it's been a hot topic right now. Gold, it is being spoken about, come off 30% from that high in 2026. What is happening? Is there an opportunity on the horizon? This is what we want to answer. The first part of what I want to show you is the gold futures price. Now, what's interesting to me is when I look at the gold futures price, I think where we are today, there is a little bit of a, potential in terms of this level being relatively important, that 4,000 level. I wouldn't call it the most important. I would say the gold futures price for me still has a little bit further to go, potentially coming down to 3,700, 3,750 before I got excited about its next move in terms of where the gold price could go. And that represents about an 8% move down, which is not much. It could happen in the next couple of weeks. What I do like though is as the price is falling on gold, have a look at the volume. The volumes really come off and come off quite significantly. Now that can be a really strong precursor to let you know that we are ending this move down. So I'd be watching gold like a hawk from this perspective from today. But I think where it gets more interesting for me, because what we're talking about is trading gold stocks and Aussie gold. And Aussie gold and the gold futures are very different to the point of view where the futures price is quoted in the US dollar. Now, I've got this Global X Physical Gold, GOLD is the ETF. Now, it tracks the Australian dollar gold price by holding physical gold bullion. So it reflects both the global gold price and the AUD USD exchange rate. Now, this matters because the Aussie gold miners earn revenue in Aussie dollars, making the AUD gold price a better indicator of their profitability. That's the thing I wanted to show you guys, because most people go and quote it in US dollars and go, well, gold's still yet to fall. I'm going to wait on gold. But when I look at this chart here, have a look at this. Come back to such an important level, come back to trend, unlike the futures. Massive buying last week in terms of the reversal, closed near the high. Look at the volume that came in last week on the low. This is all stuff you want to see for a potential rebound. The last time we saw volume like this coming through was at these key moments, lows, where price continued on higher afterwards. So a lot of things are lining up or giving the reason that Aussie gold miners or Aussie gold stocks could be ready for a big turnaround. And we're going to get into 3 amazing stocks. So first up is Northern Star Resources. Now let's go to the chart of that one. And there are a few things on this one. Keys to success: watch where the company increases gold production, producing more gold naturally. Look for updates on the major expansion project and keep an eye on costs. One key point for all 3 obviously is the gold price and also the Aussie dollar. If we are likely to get a reverse in rate situation, especially with what is going on with all the sentiment right now being so bearish and the inflation easing, we potentially could start dropping rates, which again will bode well for the Aussie dollar continuing to fall and boost the profits in things. So, but just looking at the chart of Northern Star, this is one of our biggest players. Again, beautiful stock, came back to trend. From that recent low of the trend, we've already seen buyers get involved. We're up 20%. So it's not like they haven't accepted it. The last time we tested it was back in March. We saw a nice little uptick, and that uptick ran from the low there up about 45%. We tested it again back in June, the end of June, and we've seen a nice strong uptick. Now, with that in mind, if we go to the weekly chart and have a closer look, there's also a really strong level at about $17, which coincides with all this price action dating back to 2024. And right now we're doing a bit of that compression. We've seen after this move in the sellers, look how strong buyers were. It took 2 weeks for the buyers to recover almost 20, 30%. Then we saw sellers come through, and the sellers have basically dominated since April, but they've failed to take price lower than that 27th March low. So for me, that's the key. As long as we hold this 27th March low, this market really has a chance of going higher. And we had that gap where it popped up again recently in June. The market came back to fill the gap, and look at the close last week, right on the high, really strong buying. I think now if this market can get its head above this level through here, which has been a bit of a challenge since the 5th of June, if it can take 22.92, let's call it 23 bucks, I think this has got a real chance to get back up to those all-time highs at $31. Pedro, your thoughts on Northern Star?
Yeah, Northern Star is looking quite nice. I mean, this is a good blue chip stock. It's part of the top 20 in our market. It's currently got a PE ratio of around that 18. So it is around the average for our market at the moment. Dividends aren't that great, but they are consistent. On the chart, I do like that pattern that's unfolding. And I just want to point the viewer's eyes to this section here and then to this section of the chart here. For those who can see it, it looks actually quite similar, doesn't it? You would agree that we've got this area back here in 2012, and then we had that all-time high, and then came back, and then we had that kind of bouncing action here. And it's unfolding in a very, very similar way. Now, this is the monthly chart on the left. This is a weekly chart on the left. Now, look what happens when I actually zoom out of Northern Star, and I'll lock this in to show you how the gravity of this rise. That's that period that we were looking at back there, and look what it's done ever since. It's just gone on a huge stellar rise. So if you think that right now Northern Star is at a point where, really how much higher can it go? Well, history does say that these types of patterns, even though that it's unfolding in what seems to be a bearish type pattern, if it does continue its downward move, if it does hold up, then we could see much, much higher prices for Northern Star. Now, of course, that would depend on whether the gold price can also move up. But this is a good, solid company. It's well diversified as well. I actually do quite like it. I'd like to see a break above that $22 if you're looking for an opportunity.
Yeah, and that's a good point. I mean, if you are looking at what comes next with that gold price, I think it's really important to look at the environment we're in. Central banks are still buying gold in record amounts. We do have the geopolitical tensions still in and on the horizon. But I think that the central bank buying should be the main macro driver right now that you should be watching in terms of what comes next with the gold price. Because whilst that's in, there's an argument to say that gold really has a chance to continue on higher over the next couple of months. But if you do want to learn more on how to build portfolios, look at stocks the way we're doing it, I got that upside down. Check this book out. It's How to Beat the Managed Funds by 20% by Dale Gillum. It is free. You just have to pay the shipping. The link is in the comments section or the description in this video below. But let's now dive in to our second stock, which is Ramelius Resources. Pedro, happy to take this one away.
All right. So this is one that you wouldn't be surprised. It's based out in Perth in Western Australia. It's a pretty decent company. It's consistently paid out dividends for the last 7 years. So that's a nice little plus to holding these types of stocks. Now on the chart, we need to watch for how quickly its new mining operations ramp up, and we did see a merger actually with Spartan Resources recently that was valued at over $4 billion for Ramelius. So that was quite good to see. Look for lower operating costs and lower costs, meaning that the company keeps more for every dollar earned in selling gold. Now, the really exciting part for me is the cyclical nature of this stock. Let's expand out the monthly chart, and it just makes these constant spikes in price that we saw back there in 2004 to 2007, 1,600%. Then we've got that 3,386, 540. And then more recently, we've got all the way up to that high. We've got 545%. Now, if we go and buy those rises, then we should expect price to teeter out afterwards, after it had that initial rise. And we saw that multiple times where price really goes nowhere for the next couple of years. So this hasn't had that momentum to the downside yet. What's really helping Ramelius is this long-term momentum, and it's holding up quite nicely. And as long as it continues to hold up above that momentum, then we should expect it to keep going up. It could actually not be finished, this phase of rise. And of course, again, it depends on the price of gold, but we really need to see it stay above that level. And it's nice to see a bounce from that $2.50 roughly, where it was a previous all-time high. And previously when it did have those rises, it was because it broke above those downward momentum basically. And I'm just putting it roughly on the chart there just to show you that when the momentum does change, not always, because in 2014 the price really went sideways for a long time. But really, you need to be able to figure out which phase of the market we're at. And even though it did trade sideways for a bit, it did have that nice 613% upside to the high of 2017. So at the moment, I think it's looking good. If we go to the weekly chart here, it is holding up again at a more recent level, which is around that $2.90, where we saw that previous accumulation there. The weekly chart is pointing to the downside, so I'm still keeping an eye on this $2.90 level. And if we just bring in that momentum as well from earlier, then we do have some confluence there. And then if we just quickly put a momentum down there, we haven't crossed it yet, but you can see there are multiple interjected points at this moment. It's pointing to this section right here, and I think that we should see some price action happen in the next couple of months to determine the trajectory. So if we see a break above roughly around that $3.30, then we're moving up. If we see a break below that $2.90, then we're continuing lower. And you should probably expect to see prices, trade roughly to around that $2 mark. If it does, I would expect price to really come back. And that would, of course, be if the price of gold is also coming back. But at the moment, interesting, but not quite yet. But there are some lines in the sand that we can draw to determine which way it's going to go.
Yeah, fantastic. All right, now let's dive into our third stock, Regis Resources. On the screen is the chart of Regis. Now, this one here is quite interesting. Obviously, a few keys to success. It's got the project there in McPhillamys gold project. Any major approval there or development could add well to the share price, and it also benefits from high gold prices. You can see I've overlaid here the price of gold in green, and look how unison the movements are between Regis and the price of gold on the up and also on the down. One other point I didn't mention with the gold price, and I haven't shown it, but we have shown it in other shows, is it's important to identify what the players in the market are doing right now. And if you look at something like the participants in the market being the large speculators, the retail, and the primary producers, right now we're seeing an uptick in large speculation in terms of institutions buying gold. It hadn't been the case for a very long time. If you go back to the gold futures price, literally the institutional end of buying was not evident from about August 2025. They were selling into the retail. Now we've started to see over the last week or two a really big uptick in institutional buying, and that always bodes promisingly for the potential of a reversal up. So keep a close eye on that. But back to Regis in terms of what's happening now, this 550 or 560 level, huge. Huge, and there's a reason why this one's already bounced from there and found a bit of support. That's a previous all-time high. The market has tried for years to break through this level, not being accepted. It tried back in 2019, again in 2020, again in 2025 briefly. Now it's broken through. This is going to be the big test for me if Regis has serious legs to break that all-time high. If we can hold above 560, I think any opportunity above here gives you a serious chance to break through to a new all-time high. If we cannot hold above 560, then I don't like the odds of further upside for this one. But right now, it is holding, and that's very, very promising. And if we just draw another level in terms of momentum, why we could see a bit of an uptick, and that's also, so it's showing support on a really important level on both lenses, and that's very promising right now. On the weekly chart, I think what's also promising is, look at the big volume. Very, very big volume came through, and I'll give you a bit of insight in terms of how big that volume is. Well, if we zoom back on that weekly lens And I'll just go back to 2021 because the last time we saw volume like that was in 2022. In fact, I'll just go a bit further. Why not? We're amongst friends here. But look at that. Big volume came through in December 2015. That was early on in the big uptrend, so that was a bit of an instigation. This one came through right near the lows before we saw an uptick. So literally since 2015, we've only seen this type of weekly volume come through twice before. And they've been before onsets of major moves. This is the third time. Actually, sorry, there was one other time in September 25, which was before a move up through there. But now again, we've seen it come through. In fact, that previous one, if I'm being exact, was right through there, very much where price is today. So we're seeing buying come through around that $596 level. In fact, we saw a gap, which is also a very bullish sign in terms of strong demand buying. The market went back to fill that gap naturally, and it's recovered quite strongly last week, closing near where it opened. So all things in the short term are relatively bullish, but again, we've got to hold this key level here at 560. Really need to hold it. I can't emphasize that enough. And try to find some buying, especially if we can break through that 723, 730 range. This one has a real chance of going back up and attacking those $9 to $10 regions. So, and it's quite nice because you're going to get a healthy risk reward at these levels if you do find the right opportunity. Pedro, did you want to add anything on Regis, mate?
Yeah, look, this one is looking very nice. And Regis, the way that it follows the price of gold, it's quite phenomenal. And the fact is that it's actually one of Australia's largest unhedged gold producers, which means that they take the price of what the current gold price is at the moment. A lot of them are hedged, so they sell gold at a fixed price. So they're a little bit more protected from if gold falls in price. But this one actually sells it at the current market price. So if gold goes up, this is a direct beneficiary of that. And you've covered it nicely on the technicals. I'll just add one final thing, is that unlike the other ones, this one has actually broken above this downward momentum. And I'll just clean up that momentum a little bit nicer, just in case there's some students watching and they decide to pull me up on this. So at the moment, it's actually trading quite nicely above that momentum. And like you mentioned, volume is actually supporting this move. It's holding up nicely. If we zoom in, you can see all the opens and closes are roughly at around the same position. We're not getting that heavy sell-off. We did see price trade just briefly below just to fill that gap, but now we're back up at around that $6.80 level. I think that this one is looking quite nice. If you're a little bit more conservative, you may want to wait until price trades above that $7.20, but there are multiple strategies that you could be using on this stock to be in it at the most opportune time. Because when this one runs, and get ready, because if gold runs once again, this one is going to skyrocket, then you want to get in at the most opportune time and really capitalize off those gains, because this one has run 270% back there. It's run around 230% back there. And recently it's run up 330. So it's done a little bit more, but doesn't mean that it can't go a little bit further even still.